and welcome to episode 31. Is it 31, guys?
We've got to be there.
Yeah,
It's got to be 31 by now.
Come on.
Episode 31 of the Broker Collective podcast. Joining me, as always, is Riz Malik.
The award-winning, actually, we haven't won an award, the UK's #1 top-rated podcast, according to a certain website.
Yes. So with me is Riz Malik.
Hello.
And hello. This is terrible already.
Shocking.
And of course, with us is Jamie Lennox.
Yo, yo, yo.
So today it's all happened, hasn't it? So I've got a pad, I've got a few things written down. We're going to be talking about the base rate, the FCA consultation, the Skipton kind of what's it
Buy
called?
now, pay later.
Yeah, buy now, pay later mortgage, and whether maybe 100% mortgages should be making a return anytime soon. So before we get into that, is there anything you want to ask or talk about with peers, Riz?
Peers?
Well, the last fortnight ago, you wanted to talk about peers, Southend Pier being the best peer.
No, it's still the best peer still the best peer in the country.
Okay, cool. So we'll get straight into it then. And we've had a 0.25% cut from the Bank of England. Well, the Bank of England Monetary Policy Committee with a 5-4 margin, with two members wanting to cut further, two members wanting to cut 0.5%, and two members seeking to hold where we are. So that's good news. Happy days. What are your thoughts on that, Jamie? Did you expect it? Are you pleased with it? Do you think they should have gone further?
It's priced in at the end of the day. No, I don't think anyone with a bit of logical sense didn't think that the base rate would come. Obviously, a few people probably had an outside hope of 0.5%, but their message has always been slow and steady wins the race. So they're going to do it gradually as smaller increments at the end of the day. And shock horror, they delivered on that. The voting, well, we can pretty much be sure Swatty voted for 0.5% cut. I'm not sure who the other person was who went for 0.5%. Obviously, it's interesting to see that two people still think for a hold low, and whether that shifts the dynamics later down the line for further cuts this year. Maybe they present some issues on that front. It'll be interesting to see, obviously, what swaps. I imagine swaps will probably be up a tad by the end of the day, just because of two people are still voting for a hold. But I don't think it's going to be dramatic overall. But yeah, hopefully this mortgage price war continues for a little bit longer.
Riz, who do you think, other than Swatty Dingra, who do you think might have been the other person that voted for
Taylor, it was
half?
Alan Taylor.
Is that for
That's
certain?
For certain. Yeah,
Okay.
so essentially 25 basis points as expected. The key consideration here is always the talk about further rate cuts. And if you actually watch the press conference after the announcement, it didn't really give a lot of indication that they're going to be rushing to cut rates further. And if you look at the gilts afterwards, went up slightly off the back of it. I think it's a little bit more cautious. There were still two members who actually voted to keep the base rate where they were. Let's not forget that. And that somewhat cancels out the two who actually wanted to have a 25 basis point, a plus 25 basis point cut. I think we're a long way from rates tumbling down, but I do think if inflation does continue to become under control, then things may be getting better. But this 25 bips cut at every subsequent meeting, I just can't see it. The Fed held yesterday, and I'm not sure that they're going to be moving any more quicker. They were worried originally about Trump's tariffs, but with this trade deal that's literally imminently about to be announced, I've got the news on here so we can share the breaking news as it happens. I think there's a lot to play for in 2025.
Riz has got his Bluey rocking and rolling.
Actually, Sky News today. Sky News today.
Oh, Sky News.
Were you not on there today?
I was waiting for the invite, but obviously they're getting all keyed up for Trump's tariffs, so maybe next time.
It's interesting though, but so kind of we've had that base rate cut, but I'm just looking at swaps right now, and they've bounced up quite a bit, haven't they? Particularly for 1 and 2 year swaps have gone up 9 basis points and 7 basis points respectively. So obviously those two people that were wanting to hold, that's had a bit of an impact in the market. But how many calls have you had so far from clients?
I've had a text. Well, I've had 2 texts. One from both clients going, "Can I now get a cheaper rate?" I even ended up preempting I was going to get these messages. I put a story up on my socials saying, just because the base rate's going to fall doesn't mean the fixed rate I've already got you is going to drop straight away.
Yeah.
So hopefully I've mitigated some of these risks. But yeah, just now looking at swaps.
But Jamie, good news for trackers,
Big up the tracker,
especially your tracker.
Big up the
Tracker is paying
Your
dividends. My
tracker.
tracker's looking good at the moment in time until inflation probably spikes up and it ruins the whole plan. So not financial advice and all that jazz.
Yeah.
What has changed, obviously, is the spread now between the fixes and the tracker has shortened. And that is something that I think a lot of people are going to be having in their discussions when they do discuss it with the clients. But obviously, every client has got a different financial circumstance and advice should be tailored, unless the FCA changes that, which we'll come on to later on.
Which will, well, in fact, that's a really, really good segue into what we're going to talk about now, isn't it? So if anyone's, not yet seen the kind of guidance, well, the consultation, isn't it? The consultation on the FCA paper. And I'm just going to drag up what that's called. CP25/11 mortgage rule review. And basically, by the looks of things, is wanting to simplify the process. But essentially, when you read it, which I have because I'm a bit sad, it kind of is essentially like cutting out the advisors, basically. Now, they may not phrase it this way, but essentially that's what it opens the door to do. And whatever people think of us, I think that's a bit dangerous because moving into kind of more execution-only spaces, I think there's 2 things there. One, we've been there before, and we got ourselves into a big pickle in 2008. But 2, there are a lot of lenders that we deal with, of course, that aren't high street lenders, that are exceptionally good, have some really great products, really great pricing, and fantastic systems. Then they can turn around deals, literally in the blink of an eye in some cases. And if that kind of door opens any wider, and they do actually implement this consultation, they do implement what they're talking about in this review, then it would be very easy for the big boys to use their kind of economies of scale, their already known kind of brands and personas and all the rest of it, to effectively monopolize that space. So I think there's a couple of things here. That one, the kind of consumer protection element, and 2, what happens to those smaller lenders who are starting to kind of nibble at the big boys' heels, not in terms of a overall market share, obviously, but they're doing a really good job. And what happens to those? So what do you think about this consultation? Because genuinely, I don't know if you've had a chance to read it. It's 80 pages long. It's a real drag, I'll be honest. It's quite dense. And this is as an aside, who is actually spending the time to read this and then respond to it? Not many people. I can't imagine there's going to be many. Have you read it?
This is the problem with this whole archaic system that we have. It's even with the best will and intention, the whole process is so freaking convoluted. Look, there is always going to be a need for advice in our space. And you just look at the complaints of people who have gone directly to the lenders and who have had a decision tree process applied to them. People need advice. Now, from when I joined the banking industry back in the early 2000s after university, it was the situation where people would go to their local banks and they would trust what that they are saying and what they're telling them. We all now know that there is a bigger, wider market out there, and we can tell there's a bigger, wider market because all of our cases do not end up with the same lender. It is not a one-size-fits-all approach. And that's why I think this is a very dangerous slope where some of these lenders who do have a lot of power and political sway may find that they're trying to channel, policy for their own benefit. I think this is a slippery slope that we're going down, to be quite honest. And I think people, if anything, the people that I'm speaking to, it sounds like there's a need for more advice and more advisors rather than less advice. And let's look at the advice process from a lot of lenders. a lot of actual lenders have actually massively restricted the advice that they offer face to face in their branches. A lot of them will only do it by telephone now or by Zoom. So I just think you've got to be really careful here, guys.
What about you, Jamie? What do you think do you think this will get implemented? I mean, I was talking to someone that's relatively high up in a lender, and they think I think their kind of take on it was that is the FCA just throwing something out to be able to say, look, we've put this out to consultation. So we can kind of wave it at Rachel Reeves' face and go, well, we've tried and everyone said it's a really terrible idea, so we're not going to do it. Do you think that's the kind of that's what's happening?
Well, what is it? 5 years consultation? Like a lot. The market. The problem is the speed of movement is far too slow because the requirement of regulation in 5 years' time is going to probably be very different space to where we're in at the moment in time as well. And that is the whole problem is it's so archaic and the speed to get results is poor at the end of the day. There's a lot of money gets poured into the FCA for the regulation. Brokers' fees only go up, but it is literally a very slow moving vehicle. And hence why you see like the financial promotions guide, like it's so archaic on there as well about what they cover off in it. It's not moved with the times. And hence why you've got some networks that are completely fine with social media and other mortgage networks that completely lose their mind over the thought of even use it on there as well. So I think there needs to be personally a whole lot of reform from the ground up, but that's not realistic. It's not going to happen. If it needs to be moving, adjusting little tweaks here and there a bit more frequently in my eyes. But I shared a post in the group chat of what was it, yesterday on that semi-famous Facebook person that was on there. He shared a post about his mortgage renewal coming up. And my God, the comments in there as well about how bad people were giving other people advice of what they should do. And I just think, I think my clients are pretty clued on, but there is people out there that have not got a Scooby-Doo and you think it's actually dangerous if you let them loose on trying to sort of mortgage themselves as well. And it does then feed into about vulnerabilities of what the FCA says is circa 50, 60, 70% of consumers should be classed as vulnerable. It don't surprise me after reading the comments on this post because it was scary what's going on there. So I think the need for advice will always be there. If the markets do shift and they try and relax things around the ability to remortgage on there as well, is then going to ultimately, if this does implement, it will put a more onus on brokers getting purchase deals are going to be put a more onus on that as well at the end of the day. But we shall see is what happens. 5 years is a long time. A lot can happen. Then AI could have taken over us by then or killed us. Whoever knows what they'll do. So, I think wait and see.
So actually on that, because it's one of those things where, for example, so of course we all know that, if someone's got assets of, assets in excess of £3 million or an income of in excess of £300,000, they're classed as high net worth, and therefore kind of some of the rules don't apply. They can effectively do execution only through a broker. But I don't know about you guys, but even if that was the case, and even where that is the case, my network would never ever allow me to transact execution only business. So that it's one of those things where even if the FCA did they consult on this and then they decide actually we're going to bring it in. Can you imagine networks? The networks would just go, well, we're not going to do that. We're not going to allow that to happen because So, Joe Bloggs comes to Riz and says, I want execution only. I just want you to transact it. Here it is. I don't have to do, it goes wrong. Right. So how are we evidencing that? I can't imagine any network would be comfortable allowing that to happen. So even if it did get brought in, I imagine that kind of with networks as they are, they'll just go, no, we're not. No, it'll stay as advised. And that's that because we're not going to, and if it essentially becomes, if you want to do that, just go to whoever you want to go to, but we're not doing it. But I do think it's a funny one. And this kind of moves on to this kind of 100% mortgage piece that I wanted to pick up on. In so much as, apparently this consultation is in order to kind of drive things forward with making it easier for consumers. That's, it's a commendable thing to do. Making it cheaper, again, a commendable thing to do. But are we going to get much economic growth from that? I can't imagine we are. But And if we really want to get kind of people buying homes, etc., then we need to do two things. Well, three things. People's wages need to be higher. We need to build more affordable homes, or just build some homes somewhere. It doesn't mean just build something. But the big thing here is, in lots of other countries around the world, deposit requirements are actually lower. So do you think if they wanted to do this, the easy fix, whether it's right or not, whether it's not, probably be dangerous, but would just be 100% mortgages? Because
Lewis, I think you're going to have more 100% mortgages coming to the market very quickly. I think they'll be focused on new builds for 1,000,001 different reasons. And I think that is going to come very shortly with the direction that we're going with where the FCA is looking, showing also the resilience of the UK housing market. Because what are the lenders concerned about? They're concerned about if anything did happen, how quickly people will be in negative equity. And really, since 2022, the one thing that we've seen is we haven't had that big price drop that we've previously, some people have hinted at. If anything, prices have stabilized and they have increased. So I do think that you will see 100% lending in not the format that in some ways that is available at the moment, a pure 100% lender on new builds very shortly.
Yeah, I mean, it wouldn't surprise me. Jamie, how does 100% sit with you?
Oh, the key thing is,
that was a big sigh, wasn't it?
That was a big sigh. It was a big sigh.
It's been a tough week for Jamie, hasn't it?
It's a tough gig in the mortgage space.
You haven't been to London, have you, Jamie, recently?
Not been in the trench. I'm out the trenches, mate. I'm out the front line. I'm literally just in, when they carted them all off in the war and they sent them to Norfolk. That's where I am, in my peace and quiet place on there as well. So away from the front line. 100% mortgages. How do I feel? It's a tricky one because it's not. But we all know the root cause of the problem. Well, Lewis will quote Gary somewhere along the line on this, but we're not building enough houses.
Gary.
Yeah, that's the key thing. We're not going to build enough houses. We probably never will build enough houses, and that's going to keep pushing house prices up at the end of the day. But there is a problem that many buyers are getting older before they make it onto the property ladder. And then the other issue is it's then getting harder to save a deposit on there as well. We probably pushed affordability as close as you could probably push it with, 7 times lending, 6 times, 5.5 from some lenders. There's that kind of ship's kind of sailed as far as you can go with it. And if that's not then stimulating the market, what is going to? And that is going to be a case of what's the other big barrier people face, and that's going to be around the deposit requirements on there as well. So, yeah, I think there'll be some nominal changes. Whether people will do some, sort of a 5%, 2.5%, 1%, 2%. Who knows what the final things will be? But that is the area that's probably not been pushed by a lender for a while. And I remember a chat with a BDM off the record that there was at one point a lender, quite a big lender, that was considering before off the back of COVID, before the uncertainty really kicked off with war in Ukraine, they were considering some form of 100% mortgage at that time. Whether that makes a reappearance and whether they bin that project off or will reignite it at some point in the future, who knows? But if they're considering it, there's likely going to be other lenders and boards having this discussion around there as well. So, and that's the only other thing they can really do to try and drive more people getting on the ladder. But I think even, the 6 times, the 7 times lending, it's still not really driven a lot of people to return back to the housing market to buy properties, because the 2 points: A, they're scared they're going to buy at the top, and this crash that we thought was going to happen hasn't materialized yet, but will it happen? Then will they get stung? And secondly, will interest rates keep coming down? And people think that they are experts and they can time the market to perfection and wait till it reaches rock bottom, then secure a mortgage, not forgetting that everyone else is waiting to do the same, and then it just push house prices up further when it does come. So I think realistically, the easiest way to drive economic activity in housing is get rates low as quick as possible. And that's the realization of it. All this other stuff's probably not going to do a lot.
Jamie, it's stock and it's first-time buyers. If there's stock and if there's first-time buyers, the market will move. Without new people getting onto the bottom, the market's not going to jump up and do anything very quickly. And if there's stock and people have got confidence, then it will happen. I've been hoping that the impetus would come back into the market for some time. Obviously, with the stamp duty incentive for the first-time buyers, that got things moving. But regardless of any incentives, there should be a natural flow of people looking to buy property. And until they address that, especially where we are in London in the southeast, I think the system's going to be. I think the system's going to be broken because it's just becoming more and more unachievable to buy a house.
Well, this is the thing, right? So obviously, I'm not in London, the southeast, but I could.
Have you ever
I'm pretty
worked in
certain
London?
I have worked in
Oh,
London. Yeah,
you've never
I used to live in
mentioned
the
that. You've kept
trenches.
that to yourself. When was that?
I was also at university in London.
Really?
Just in case
Which university?
Yeah. Well, it's a little known university called UCL.
Oh, wow.
So, but I could walk into the marketplace in any market town around here. So Mansfield, Chesterfield, into Sheffield city centre, into Nottingham city centre, and I could probably go and meet a tenant on the streets and say, let's have a look at what's coming in. Let's have a look what's going out. Could you afford to pay a mortgage? What's your rent? Yes, I could. What's stopping you? I've not got the savings. I've not got the deposit. And for people that don't have family support, and that's a significant amount of people, particularly now that costs have risen and presumably people are dipping into the savings, that is the one thing that can get things moving. I wish there was more kind of consultation on that, because if someone can pay the mortgage, right, and it's going to take them, let's say, 3 years to save the deposit, that's just 3 years where house prices are probably going to keep marching out of reach of them. It's 3 years rent kind of down the drain, and even if the interest rates were pretty high, when I've had this conversation before with people, I've always said, well, look, when you're renting, the effective interest rate is 100% because you get nothing at the end of it. So anything lower than 100% interest rate is going to be beneficial, right? And I wish they would kind of drive that. Well, that and kind of building houses. Although I did see from Noble Francis on Twitter earlier that brick deliveries are up.
Well, Lewis, this goes back to the other issue with regards to interest-only borrowing, which I know that we've covered a few times on this podcast. If the alternative, this whole fascination with capital repayment, if the alternative is to have somebody on the housing ladder and a large element of their borrowing is interest only, how bad is that compared to renting forever or being generation rent? I don't think that is bad. And that's something that I think that they should urgently look at, which would definitely help a lot of people onto the property ladder. Because I know you might have heard someone called Gary Stevenson. He talks about this class divide. I just think the divide for some people to get onto the property ladder is just getting greater and greater. Have you ever met Gary Stevenson, Lewis?
I have met Gary Stevenson, yes.
Have you got a picture with you and him? You dwarfing him?
I have got a picture. I've got a picture of him, yeah. It's in my phone somewhere. But you're right. So in terms of interest-only mortgages, so I think the peak maturities for interest-only mortgages when they were kind of more commonplace is 2031 and 2032. That's when the peak interest-only mortgages, I think, will hit. And that is probably, if this consultation does come to pass, do we really want people to not be having advice when they're coming to the end of an interest-only mortgage and they don't know what to do? And, when we can kind of say, oh, well, it is what it is. And, there you go, basically. I'm not sure that's a sensible thing. But hey-ho. So, 100% mortgages. However, we should obviously give a shout out to the only lender that is doing 100% lending at the moment, as in kind of standard 100% lending without kind of taking a charge over someone else's property or someone putting savings into an account that they get back later. And that's obviously Skipton Building Society, who do offer a 100% mortgage. And they've obviously got, kind of their innovation pants on because they have released...
They love a scheme.
Another scheme for first-time buyers. Well, I think one person has to be a first-time buyer at least, called the delayed start mortgage.
Is there a delay on Skipton's emails as well?
Oh, come on, it's an email. Don't worry about it. I know you get, and obviously Riz gets very angry when he's not the first person in the UK to know about any change in the mortgage market, because he is the UK's #1 broker. And he was probably getting
no. I've never said I'm the UK #1's broker. That's not fair. But the Independent this afternoon has referred to me as a wealth manager, which I was very surprised at.
Yeah, but I bet you loved it.
I loved it.
I bet you absolutely
made
loved
my
it.
day, mate.
It's already been framed on the wall.
Made my day. My mum's going to be so proud of me.
So, with the delayed start mortgage, I'm guessing they had a good kind of sit down and thought for the title of that for 5 minutes. But essentially, for brokers that haven't got the email, then essentially you can have 3 months grace before you start paying the mortgage. And again, on Twitter, I saw people kind of jumping up and down, calling it a grift and all this kind of. So almost everything is a conspiracy, and it's like, no. I mean, I get where this product's coming from. You know, it's the point in time when you're buying your first home, you're probably very short of cash because you're putting everything into the deposit. You've got the solicitor fees. You know, depending on where you are in the country and what price you're paying, maybe you've got stamp duty, maybe you haven't, but you've got all these other additional costs. So to give people a bit of grace when they first move in, I don't think it's a bad thing. It's not necessarily my cup of tea. I'd say maybe save for a couple of months before you start looking, but you know, it's another option. So, or do you kind of see this as what do you see, Jamie? Do you think this is kind of like tinkering around the edges, or do you think it's actually like this is useful?
It's twofold really, because you know you can never knock innovation. Otherwise, everyone will just be square peg constantly. So it's good to see certain stuff come about it. I think it does have its place. It just needs to be probably a little bit more explanation around the implications of it as well. Obviously, interest has occurred from day one, how much extra it's actually costing that consumer as well, because all the consumer will see is 3 months or whatever of not having to pay my mortgage. Light bulb, and they think actually I can then do other bits on it as well. And for the right person, it's the right product. But it then always comes back to getting the advice. People will just read the headline on the papers announcing it, and they'll go straight to the lender, not get advice, actually work out, is this product actually right for me, for what I actually really need to do, or is it actually going to cost me more in the long run? And that always comes back to the root causes. Advice is key. So I think good in one side, bad in the others. I think buy now, pay later is a slippery slope in general. I think that's why everyone's probably jumping on the grift. Obviously, you can now buy a pizza from Domino's and other fast food venues are available on Klarna. So, you know, it's like, again, it's right, we're now going to level the mortgage. And as I said earlier on, I saw a stat in the US, 25% of people are now buying their grocery food on buy now, pay later. And I just think,
when you say buy now, pay later, Jamie, do you mean credit cards, or do you actually mean like a Klarna type thing?
Like a Klarna. Yeah.
Wow.
I mean, that speaks to kind of, you know, growing divisions between haves and have-nots and people not being able to afford to live. And
yeah,
I mean, there is a guy that did talk about that a few times. Do you know what I mean? I don't know who that handsome chap stood next to is, but
Lewis, he looks like he's trying to get help from someone. You bear hugging Gary Stevenson.
Blink 3 times and let me free.
Look at him. He's happy. He's very happy with that. I give him a good squeeze. And said, thank you very much. You know, have you got a few tips on where I should put my money? Gold.
Not financial advice.
Yeah,
not financial advice. Okay, cool. So we've covered off base rate. We've covered off the FCA consultation, 100% mortgages, Skipton's delayed start. What else have we got?
I had my sense to Skipton's delayed start, unless you're just going to not ask me.
Well, I wasn't going to ask you, but now you've brought it up and you're getting angry and touchy.
Everyone wants my
opinion
at the end of the day, don't they? They just want
the
Lennox opinion.
Yeah, so look, you know, Skipton should be applauded. Anybody who delivers financial innovation in this market has got my applause. You've got to be a bit careful. People might get into a false sense of security if they're not making their mortgage payments. Sometimes forcing somebody to make their payments quicker gets them disciplined even quicker. But whether they do it or they stage it, I just think it's good that somebody's trying to think outside of the box. I think we got the email around lunchtime when it had been launched everywhere else at the break of dawn. But yeah, I think it's a great product for the right people. Like most products are good for the right people. And congratulations to them for innovating, and other lenders should follow suit. Innovation doesn't just mean increasing your loan sizes. We can innovate on criteria as well, and product innovation. And that's where I think some lenders need to think outside of the box. Otherwise, why have you got product departments?
So, moving on from that, how are you finding business? I mean, I don't know about you, but I've seen quite a few down valuations recently, and I'm just wondering whether that's the shape of things to come. What are you seeing in the market at the minute? Because I'm getting a bit fed up with one particular lender. I won't name any names, but and it kind of case after case after case. There seems to be an issue, nothing to do with the actual person, but quite a few down vals. I mean, yeah, it kind of comes in threes. Maybe I've killed a magpie. I don't know, but it's a bit odd. Are you getting that as well?
I thought you said previously there's no such thing as a down valuation, only actually someone's assessment of what a valuation is.
Well, no, I have. That's my kind of...
That's actually, you said that to us previously, and when I had thought about it, I actually thought that there was a lot of sense to that, because when we ask a lot of people what we think their properties are worth for a remortgage basis, especially, they just pick a figure out of the air. There isn't, well, yes, next door went for X per square foot and mine's this, that, and the other. So it's all down to comparables, isn't it? And the big problem that you've got, and we've had this since COVID, that as there hasn't been a huge movement in housing stock, we don't have that database or that bank of comparables. So you might be on a road where no one's moved for some time, and they're using something on another street, and a surveyor's adding an element of cautiousness to them. I've got a deal at the moment where I think we're on our second or third lender in terms of valuation, in terms of the deals, and trying to get it to fit within LTV brackets from where it's been. I think this trend is going to continue going forward. I think the bane of our lives going forward are going to be down valuations when you're at the cusp of an LTV tier, and also that when we are looking at mortgage or remortgage deals, lenders changing rates, and us having to go back and having those conversations with the lender and or the client, especially if there's quite a bit of time away from when their deal actually goes live.
What's it like for you, Jamie, down in the down in the Broads?
I'm just had a look at a client's just had a valuation come back on the client as we speak. I've had an up valuation on a remortgage.
Really?
Didn't even need to. It wouldn't impact loan to value.
What was it? A lender beginning with N and then ended with the direction?
No. The other
I've only had one increased valuation on a remortgage in my whole career, and that was by NatWest.
Yeah, this one is the wide. 10.
The wide. Can I just add, before we came on air, or just before we came up here, the first lender post Bank of England base rate meeting to actually announce that they're making reductions to some of their products.
Okay, decent. Happy days. So even more good news, which, well, good news for us, because hopefully it'll get a few more people through the door, and we are here to make a couple of quid as well, obviously.
So, Jamie, what were the circumstances behind that? What's actually come back on that then?
Well, to be fair, I was conservative, so it was a new build 2 years ago. But you normally think new build is probably overpriced when you first buy it. It may come down a little bit if I'm lucky. Might still be worth the same kind of value 2 years on. But yeah, they purchased it for 335, come back at 345 on a new build after 18 months. Obviously we've done remortgage sooner, so it's like actually not a bad result on that one as well. So happy days. Obviously everyone's flooding the trench, leaving the trenches and coming to Norfolk, so obviously buyers demand up here.
That's what it'll be. So it'll be because there's a pub for every day of the... Is it pub for every day of the week?
In Norwich, not anymore. There used to be a pub for every day of the week and a church for every Sunday of the year.
What a place!
Fame. Big up Norfolk.
That's my kind of place. That
Coleman's
not
Mustard,
Riz,
Alan Partridge, and Delia Smith is what we're known for.
Let's be having you. So, Riz,
Lewis,
what's happening in Manjaro Corner?
In Manjaro Corner, 7.5 milligrams isn't my friend at the moment, but I know that 10 milligrams isn't your trend at the moment. And I do think I'm a medical anomaly because I think I'm immune to Manjaro.
Jamie's so fed up of hearing about Manjaro, aren't you, Jamie?
I think my wife is fed up with Manjaro more than anything.
Jamie thinks that we should just be kind of carrying boats, running with logs, doing a Goggins.
100%. Goggins. I want you to be doing 100 miles a day barefoot. Bastard.
Yeah.
No water either. Just raw dogging.
Jamie keeps on saying it's simple, calories in versus calories being burnt. And that's the reason why he doesn't approve of me and Lewis being in Manjaro corner.
Yeah. So we'll move swiftly on then from Manjaro.
I think Manjaro corner actually is one of the things that a lot of people tune in to hear about. We should do a poll on that.
We should do a poll. But so I do feel a bit ropey because I stepped up a dose a couple of days back, and I do feel it's made me feel a bit rough, I'll be honest. But it does work. I mean, yeah, some people will call it cheating, and I kind of guess it is. But do you know what? If it works, it works. I've seen people take far worse to do to do far less. But anyway, so we'll move swiftly on from Manjaro corner and our obesity crisis in the broker collective, as 2/3 of us are obese. And we'll move swiftly into Technology Corner. So, Jamie, what have you got for us in Technology Corner this week?
Oh, I forgot about Tech Corner. Tech Corner. What a struggle that's going to be to fit in.
Riz, what have you been? What tech have you been?
I'm loving
recently?
Lovable, man.
Yeah,
I'm loving Lovable.
It is good. Although Jamie sent me something the other day on TikTok about Figma. Was it called Figma Create?
Yeah.
But
so
there's
Figma's going to replace, for website building. Figma's great for building out the visual element of it, but then it's always been quite hard to put that into code for websites. But this will now, from the looks of it, do the full shebang. You can make it look really pretty, and it will then code it for you without the developer at the back end pulling his hair out on there as well. So that looks quite exciting. But yeah, tech's a bit of a hard one. There's been a lack of real innovation of stuff to, I'm still building out Go high level in the background. They're adding tweaks as every week goes on. They do updates on that as well. There's a now client portal where you can send and receive documents via there, which is a bit more usable on that side of thing as well. But there's been no major developments of software I've come across that feels like it really needs to be investigated as an option on there. For me, it's just a case of there goes the old Ring doorbell. Probably my kids ringing the doorbell to remind me they're home. But yeah, I think tech's a bit of a slow one at the moment in time for me, unless any of you boys have found anything.
I've not got anything at the moment, although I am hotly waiting for a CRM to be able to pilot. So I'm looking forward to seeing that, which is an AI system. And it does look very good. It does some really cool stuff, like you can kind of hook it up with your VoIP phone, so it's key in the fact finding when you talk to someone. It can read documents and kind of extract information. I'm looking forward to getting kind of set up with that. And obviously, as that happens and we go through it, and Jamie, all being well, and Riz, you're also going to be jumping on there too. But I do think that given the kind of speed of change with AI, there doesn't seem to be many players, does there, in our space? There's not really many players that are kind of saying that we, even if they don't have something ready to go yet, that are saying we're building something, we're coming with something to kind of keep people. Because if I owned a CRM system or a CRM company, you would kind of see this coming down the line. And in order to presumably hold on to people, you would at least say, we're actually building something out in the background. Yes, it's not ready yet, and we can't show you anything at the moment, but it is coming and it is going to be brilliant. No one's doing that, and I don't know why.
Do you know what? Do you know what could absolutely smash out of the water? If you get mPowered or M-Cubed, just go, we're going to use our system we've built our mortgage underwriting on to be a mortgage CRM.
Yeah.
90% of mortgage broker problems would be solved for the actual CRM element of it as well. Imagine if you put the details in, it pulls through, you upload the pay slips, it pulls through all the basic salary, all the bits you want it to do, it pulls through the client's credit report, all ready to go on that front, matches up the ID, does the ID checks in the background, bang, bang, bang. If they can underwrite a mortgage in minutes, Imagine what they could do for our the back end side of thing on there as well. I have got one bit of tech, actually. One bit of tech this week.
He's been keeping it back, but now he's letting the world know.
Holding back. It's come back to me. Adobe AI. For people that are, maybe a little bit less trusting of, smaller companies coming out with AI technology and client data. Obviously, we're opening clients' bank statements in Adobe. The information is shared with that system already, but inside Adobe, it's now got an AI assistant, and I'm started using it for income and expenditure, so I can get it to total up, going through the banks. Oh, my kids are going wild with their doorbell. So you can use it so it totals up all the expenditure on, can you pull out all the clients' food expenditure at Sainsbury's? It will pull out all the transactions, total it all up for yourself. Bang, put down your budget planner on there as well.
So you open the PDF, and then within Adobe PDF, you can ask it questions about the PDF it's just opened.
Providing you got the subscription to
Obviously,
Adobe, a freebie's not going to do it. But with the paid for one, you get the AI included, and that will add up. I did it today, added up all the expenditure at Sainsbury's, Marks and Spencer's, pulled out, saved me trawling through 10 pages of bank statements. I ask it how much is their council tax, bang, pulls me the figure back straight from it as well. So is there any credit commitments, bang, pulls them all out. So it's a bit of a little bit of an assistant to try and save people trawling through and spending up as much time getting that calculator out, smashing the numbers in to total up people's food bills and fuel bills and stuff like that as well. So that's a little handy tool to make everyone's lives a little bit easier.
Lewis, can you tag Adobe in this? Maybe we get a brand deal out of this.
Yeah,
definitely.
Yeah, I'm sure they'll be looking for 3 random mortgage brokers, even though we do have the number 1 UK podcast, in the Great British Isles, and somewhere in the world. I don't know what number were we in the world. Does anyone know what number we were in the world? No one's looking. Excellent. Yeah, I'll tag Adobe and see what they say. I'm sure they'll be definitely up for it. Well, in fact, we should say, because previously when we've recorded episodes of the Broker Collective podcast, we've not always put it on YouTube, but we're actually going to start now just putting it straight onto YouTube, as well as obviously where you get your podcast. So if for some reason you don't want to just hear our dulcet tones, but you do want to see our beautiful faces, mine as it slims down, Riz's as it stays the same, Jamie's as his hair recedes, then our YouTube channel, which is the Broker Collective, is where you could actually see us in all our glory. If that, well, that's definitely the wrong words, but hey ho.
No one wants to see your glory, Lewis. Lewis, what about our suggestion about future guests onto the podcast? We've obviously had some notable names who've joined us along our journey to the episode 31, did you say?
Yes,
episode 31 that we're at the moment. But we are also going to be reaching out going forward, well, Lewis is, to other people that we think would be fantastic guests on the podcast. Lewis has already written to a member of the Bank of England Monetary Policy Committee, the broker's favourite, Swati Dhingra, who I must also remind you that today voted for a 50 basis point cut in the base rate, not just the standard 25. What was your email? When did you send it? Sorry, and how was it received, Lewis?
I've not followed it up. I sent the email to Swati Dhingra. It was a few weeks ago now. I mean, to be fair, I'm sure she's a busy lady, being on the MPC, and also she's a lecturer at the London School of Economics. So she, in the event that she even saw my email, she probably thought, "Who's this dick?" But I will follow up. But yeah, I mean, if in fact we could probably shout this out, because anyone that clicks on this on LinkedIn, we'll probably put it out there. Does anyone want to come on and be a guest? And in fact, who would you like to see as a guest? There are a few people that we've kind of put the feelers out to. There are some people that have said yes, and we're just waiting to get them booked in. But I guess if there's anyone that people think that we should get on or would be a really great guest, and they were willing to come on, then obviously
I would like Rachel Reeves.
Well, yeah,
we can always aim high, can't we?
Aim high, yeah, aim high. Started at Rachel Reeves.
And for those people who are going to come on or want to come on, we are not going to send the video to third party. Your compliance has to sign it off for this reason or the other. So if that's the situation, then unfortunately, this is not for you, because we're not doing that.
Jamie, who do you want on?
I just said Rachel Reeves.
No, Jamie doesn't want Rachel Reeves on. You might.
Can we get Farage on?
Oh,
my word. Jamie wants Rupert Lowe on.
Oh, Rupert.
Jamie wants
All right, so
Rupert on.
Lewis, for next week or the next episode, sorry, can you please try and contact Rachel Reeves and Nigel Farage and see if they'll come on the Broker Collective podcast?
Okay, I'll try. I'll have a
God
go.
loves a
I'll have a
trier.
go.
God loves a trier.
God loves a trier. God does love a trier. So that brings us to the end of episode 31 of the Broker Collective, hosted by myself, Lewis Shaw. And with me today was, as always, Riz Malik.
Thank you.
Jamie Lennox.
Yo, and bye. My kids are now about to greet me as they come home from school. So,
happy days,
we're going to have some extra guests. Yeah, I'm in here, mate. You coming in?
Get them on.
Wow, that's going to be an interesting end. You're going to come on?
Say chaotic.
Another podcast? Not now, after coming in. Oh, well, that was an eventful end to it. But yeah,
that's it.
Catch you all in 2 weeks' time.
See you in a fortnight, guys. Bye-bye.
Bye-bye.